Today we're going to be checking out sold properties and then looking at them from the eye of an investor to see if they would have been a good investment. Today we are working with a property that's sold on London Road in Tonbridge, and let's have a look at what we're working with here. As you can see the photos, this property, it needs loads of work. So this might work really well as a flip. Here we go. Here's the front of the property. You see it's a very big property. It labels itself as a 6-bedroom house. It's actually a grade 2 listed building, which I know some people are like, oh, grade 2 listed. But typically that's just, okay, you just got to make sure you get the right windows and doors and don't change anything too major on the outside of the building. But looks like there might be a lot of margin here, but we're going to find out. So as you can see, going for the photos, it's going to need new kitchens, new bathrooms. It's going to need all flooring, probably replastered throughout, repainted. Let's assume that it needs a rewire and a new boiler. And yeah, so let's just say full refurb needed for this. Now let's go ahead and look at the floor plan. The floor plan is going to be good because it's going to give us an accurate idea of potential opportunities we can do with this property. So if we have a look here, we've got 1, 2, 3, 4, 5, 6, 7, potentially 8 bedrooms part of this property. So it labels itself as a 6-bed property, but there's easily multiple bedrooms there. In fact, there even looks like a potential to turn this into multiple flats. So that's very exciting if we would go down that route. But let's keep it simple to keep the video short. We're going to be working out on a few exit strategies. We're not going to be doing a flat conversion just yet. But what we're going to do is we're going to have a look and see if it works as a flip. How big it is and looking at how many bedrooms it is. Let's work it out as an HMO. And then I know from experience that Tonbridge works very well for serviced accommodation. So we're also going to work it out if it was to use as serviced accommodation. Also going to work it out as a simple buy to let. So the first thing you do when you find an opportunity is you need to work out what that property is actually worth, and more importantly, what that property is going to be worth once it's done up to the end standard. For that, you need to get some comparables. So go on Rightmove sold, look within a quarter mile, look for like properties, and then, you know, make sure you find out when they were sold, how much they were sold for, and how big the property was, because that's going to allow you to calculate the price per square foot and then also adjust it for appreciation. And that's what I've done here to cut some time out. I've already done it for you. I didn't have any current market value comparables. And what that is basically properties that are like for like, but also in the same condition. So we know if it was in a worse condition, what the worse condition properties sell for. But there weren't any properties that I found that were, you know, falling apart. So I don't have any of that, but that's only to work out how below market value is. More importantly is the end value of the property, which we have here. So we have a list of properties. You know, here's an example of one. Maybe they're not perfect in terms of like exactly like for like, but they're in a really good condition and they're close to the property and they've got multiple bedrooms. It's not like we're comparing a flat to this property. Okay, these are a bit smaller, but it's in decent condition. And most importantly, you just get a lot of these comparables and then you're going to average them all up. Make sure if you are getting some of these properties and they are going back, you know, sold 2, 3, 4, 5 years ago, you need to adjust those figures for inflation. So you need to work out how much the area has appreciated or depreciated over the years. So I've done a whole report on this one. And if we have a look down here, we can see the last 5 years, this particular area, well, over the last 2 years, 2022 and 2023, yeah, the price of the areas actually started dropping and had a massive fall from last year to now. It's gone down 20%. Now, I can't tell you exactly what the reason for that is, but it is something to be worth knowing is, hey, the last 2 years it's had a big drop. But up until that point, over the last 5 years, it's had a very steady, gradual rise. So I assume this is probably just one of those blips and it'll probably just return next year, but we have to take it for what it is. So we need to adjust the area based on this. And that means over the last couple of years, the prices have come down, so you adjust that. And that will give us our end evaluation once you multiply it by the square footage of our property. Now, our property is a very, very big property. In fact, look at this comparable. This is probably the closest comparable I have. You see, it's also a very big property. This one has 5 beds, 3 bathrooms. Very big. You can see how much room is in there. Very similar to ours. This one has a conservatory though. Now, if you take all those comparables and you times the pound per square foot times our property, it will give us an idea of what our property's worth. And we are getting 965,000 as an end value, which means that gives us a lot of room for build costs. So we've got a lot of room to work out how much the build's going to cost. Also, that's doing the comparables manually, but it might be worth also using some automated softwares to work out what the price of the property is. However, sometimes they're not as accurate. So I've actually done one of these, as you can see here. I don't know why this one's taking so long to load. Like, usually it gives a bunch of comparables with this, so you can generate a report. But it's actually saying that the property is going to be worth 1.4 million. So I don't know how much I trust that, but you know, that's a big range. Maybe it can achieve something like that. I would, if I was seriously going on and packaging it as a deal, I'd talk to some agents, I'd get some extra evaluations, I'd use a couple more computer generated ones. So I'd have my manual comparables, I've computer generated comparables, and I have an agent or two on their evaluation. And that way you've got a better picture. But to keep the video simple, we're just going to say, okay, this is the end value. We're looking at 965,000. So for the build costs, normally I work with builders to quote up the builds and then be in place to take them on. So if you buy a deal from me and it's a refurb, then once you bought the deal, if you want it to be hands off, there will be a builder in place that you can choose to hire or pick your own builder to take on the build. But I'm not going to get a builder to price up this project because the property's already been sold. So what I've done, I know, how much things cost from a very surface level. So I've done new flooring, plastering, repaint, rewire. I've done all of them, and I've added an extra 20% for contingency, and I'm getting the build cost to be about 83,000. So now we have all the key figures. Maybe we need a couple more figures. For example, stamp duty is almost 40,000. Legals, get a good solicitor, you can get for 2,000. Say they bought the deal from me, so a sourcing fee would, for this property, be about 13,000, 2% of the purchase price. Which means their total investment, being the property purchase, the build costs, and all the extra fees, we're looking at a total investment of about 788,000. With an end value, if you were to sell the property on for 965,000, we're looking at a profit of 177,000, and that makes the return on investment a 22.5% return on investment. Absolutely great flip, especially when you take into account that this will probably only take 6, maybe 7 months, maybe less than that if you get good builders and things come in on time. But that really good return. So it works great. This would be a fantastic opportunity as just a flip. So let's say we want to keep this property on and we want to generate some cash flow. How much cash flow can we kind of pull out of this property? So let's look at trying to do it as a buy-to-let, as an HMO, and maybe a service accommodation. If we wanted to do it as a simple buy-to-let, we're looking at a rent income of 4,000 to 4,500. And after you take 10% for maintenance, 12% for management, then you're profiting about £37,000 per year, which gives us a return on investment of 4.7%. So not a fantastic return on investment, but some people see buy-to-lets very simple, very vanilla, very safe, right? And better than the bank. However, I think we can do better, especially with this property. Let's look at it as an HMO. Currently, I've done a little bit of research. Tonbridge has Article 4 in the area, but it doesn't look like it has Article 4 on this particular street, which means we're able to rent this as an HMO. In fact, some places that do have those Article 4 restrictions, you can rent them out through social housing. In fact, if you are thinking about, renting out a house as a buy-to-let or an HMO, definitely consider working with a social housing provider to rent the properties from you, because you'll get similar rents and you won't have to pay any of the maintenance, managements, or any of the extra fees. Just a quick tip for you. and working with a company. They'll usually do, you know, leases of 5 to 10 years, and yeah. But let's say you wanted to run it as a HMO. After those fees, you'd be looking at a rent intake of about 5.3k, and that will profit £45,000 a year, or a return on investment of 5.74%. We're definitely getting better. We're getting much better than the 4.7. But I know from experience that Tonbridge works really well as a serviced accommodation. I've got a couple of friends that run service accommodation businesses in Tonbridge, and they do very well in that area. So I've run a report here on the service accommodation, and as we can see, we get an average daily rate of £84. So we could rent out each of the rooms, bedrooms, as a serviced accommodation and look at getting maybe £84 a night for it. The area has a fantastic occupancy of 72%. So let's say we rented out each of the rooms here, 6 of the bedrooms, potentially 8 bedrooms there, but let's say be conservative and say 6, and we rent them out for £84 a night. Then the average occupancy, 72%, after 5% for maintenance, 15% for booking fees if you use like booking.com or Airbnb, then 15% to them, 12% for management. Then we're looking at profiting £84,000 a year. That's huge. That's massive. Even if the occupancy is 50%, we're doing way better than running it as an HMO or a buy-to-let. So good opportunity here if you wanted to rent it out as a serviced accommodation, but it gets even better. Let's have a look if we want to pull our money out. So we do the property up. You can either sell it on and get your money and then make your profit, but you've got to pay a bunch of taxes. Or what you can do is you can refinance the property. However, in Kent, property prices are very expensive, and typically if you refinance a property, then the mortgage is more than any rent that you'll be able to attain. So you can't refinance all that much money out typically in the south of England. But with the serviced accommodation approach, because it generates so much cash flow, if we refinance this at 75%, we actually up our return on investment massively. So service accommodation, let's pull out 75%, which means we leave £64,000 in the deal, but we are profiting £40,000 a year, which gives us a return on investment of 63%, which means we're going to get all of our money back within 2 years. So that's a great deal if you ask me. So there we go, we've looked at the opportunity, and now we can safely say this would make an amazing investment. Great for a flip, great as an HMO, especially if you get a social housing company in there to rent it from you, eliminating a bunch of the maintenance and management costs, and especially works well as a serviced accommodation. That kind of a service accommodation business requires a lot of work, but with the kind of cash flow that generates, I think it would be worth it. So if you are interested in deals just like these, make sure you sign up to my website and book a free 30-minute bespoke call with me, because I work on a bespoke basis with investors looking for these opportunities and then packaging them up ready for them to just look over very, very quickly and then decide to make that investment decision. I work with countless sources and they're sending me deals all the time. So make sure you sign up to get your hands on a deal.